established, but the markets are so out of control because there's so much gearing, there's so much going on that have nothing to do with the actual underlying commodity. I think the system just needs a hard look from top to bottom, and it should revolve pretty much around the physical market. In other words, if I was going to implement a rule, I would state that you couldn't ever, no matter what the commodity, hedge more than a year. I mean, you only have a crop that's good for a year, and you only mine so much silver in a year, or you only, grow so much corn. I'm not talking about the financials now. I'm talking about all the other commodities, the softs, the ags, the metals. But, that makes common sense. I don't know. But what you said, I think, is very, very correct. There is a bias here. Going back again to, I think, one of our first shows in the early 2000s, I made a call, and I think you agreed with me that we had seen the end of the mega trend. We're going from the era from things that you want to things that we need. We're going from a top in the stock market around 2000 to a bottom in the commodity markets. And from then on, you're going to see things that we need, which is basically the commodity sector, increase in price in a huge mega trend that's probably going to last for 15, maybe 20 years. And the stock market is really not going to do that well at the same time frame. And so far, that call's been accurate, and I continue to believe that's the situation. And governments, as you say, Jim, are probably doing their best to keep the genie in the bottle. Look at what they've done. Two of the most important commodities that exist, energy, oil, and food, both those things are rather essential for human life. Both are considered commodities, and yet they take them out of the CPI. Why? Well, because they want to bias it so much. The two essentials that humans need the most aren't even reflected in the consumer price index. Give me a break. I mean, they think we're, second-grade kids or something? I mean, there needs to be some adults running some of these agencies as far as I'm concerned, but that's, not what we see very often.
I want to come back to this silver market once again in terms of, you're looking into it. It would appear that there have been some attempts going back to people predicting when the price would rise and fall. But if you look at the silver market, some would argue you can manipulate it in the short term. You can't do it in the long term. And if we look at the last decade, silver's gone from 4 to 48, but it's at close to 30. So 4 to 30, that's a significant move.
Yep.
Gold has gone from 250 to 1620. But some people would argue that if there wasn't this manipulation or the appearance of manipulation, the silver to gold ratio, which is at 55, would be much lower than it is today, maybe along the lines of where it was in the last, let's say, bull market in the 70s. How would you respond to those arguments?
Well, I'm not a market forecaster, and anybody that would be thinking they want to take my advice would be in big trouble. And so I'm very hesitant to say what I think is going to happen in markets. My job is to make sure that they're free and fair, which is why I've raised some concerns about silver. But that said, I think there's arguments on both sides, Jim. There are people out there who say, once the big bad government finally controls this manipulation, the price of silver, the price of gold is going to go sky high. And you hear that a lot from people who want to, what? Sell silver to you. They want to encourage, and no matter how high silver gets, but if you just buy more, once the government gets out of the way or once the government controls this nefarious manipulation, then the roof's going to blow off silver. So, again, I'm not a market expert. I'm not saying buy or don't buy, but I am saying be careful of folks who make claims about what's going to happen. Be careful with your money. Don't invest money that you think that you can't afford to lose. These are naturally risky markets, and I'd hate to see anybody lose their kids' college fund or their retirement or money they need for health care. So if you're investing, make sure it's money that you're investing wisely.
Now, Eric, obviously, he's working for the government. He can't give investment advice, but, this ratio of 50 to 1, where it is on the day you and I are speaking, and you're talking about in the fiscal market, that ratio is 6.5 to 1. Certainly, if we would not have these big drop downs that we've seen, especially over the last probably 6 to 8 months, one would suspect, Eric, that ratio would be much, much lower. But I guess maybe the good news here is it only takes a small amount of buying to drive the price up. And to this latest escapade, it took almost 22 times the amount of short selling to bring it down. So, Eric, are they losing this battle because on the day they took silver down, I called up my dealer and I bought silver. I said, you want to take it down to that price? You just put silver on sale for me. And talking to various dealers that day, and I know your daughter deals in bullion, the phones were ringing off the hook, people taking advantage of this. This to me just spells out that in the long run, they're going to lose this battle.
First of all, I'd say I admire Commissioner Chilton for standing in there. I don't admire him for the lack of progress. Like, I'm surprised that he could express the views he had, and yet nothing's happened. And these views that you quoted were probably made 15 months ago or maybe even 2 years ago, and yet nothing's happened. Further exemptions, extended reporting periods, things like that. And I don't buy into the argument that, people who are saying it should go to this level are people who are trying to sell you silver. Although a lot of us are, because we see the obviousness of it, right? I mean, it's fairly conclusive to go from, well, something's manipulated and there's going to be a shortage to say you should buy. I mean, that's common sense. I mean, it's like people who are warning about a housing crisis. All of us said, oh, well, how can they say that? They're just trying to profit because stocks are going to go down or the economy is going to be weak or whatever. Well, sure enough, they ended up being right. And they were, of course, in the minority. And those of us who speak out about silver and gold are in the minority. I mean, there's probably, 100 or 200 people in the world that are willing to put their views out there suggesting that something's wrong. And as there were probably very few people that were vocal about the housing market when it was peaking. So I don't think that, characterizing people who suggest buying silver are shills. I think it's because we've looked at all the data, we look at what goes on in the market, and we see the obviousness of what's transpiring. And it's interesting that, we might be making some headway with some of the producers. As you know, we asked some of the producers not to sell silver. We actually, in our last issue, got 2 of the producers that bought our silver trust. We've seen other companies delay selling because they realize what's going on in the market. And I think this kind of action that happened on Leap Year Day, when we next speak to silver producers, say, do you see what's happening here? Do you see 225 million ounces sold in an hour? What do you not think that somebody's manipulating this market? And I don't know why their conclusion couldn't be otherwise. And therefore, you got to stand in and do something about it, because you can't let the paper guys just determine your fate here. So again, I mean, I keep saying it. I think we'll win the battle. I don't think we're just saying it because, we are disposed to be buying silver or gold. I think the facts speak for themselves, and in due course we'll win the battle.
Dave, he's sort of implying there that there's a lot more hype in the silver market, and if the government can just get the bad guys out of the way, it's to the moon. But still, it's sort of, he didn't really address what I thought was the fact that this silver ratio, and Eric, you had mentioned that in terms of physical silver to gold, that ratio is probably 6.5. Dave, what are your thoughts as you heard him address that question?
Well, a couple things. First of all, the ratio obviously is favoring silver from the inception, because it started 80 to 1, we're now at 50 to 1, which proves that silver's outperformed gold from the beginning of the bull market. I also think that by the time the bull market ends, you'll see the classic or monetary ratio, which is 16 to 1 or perhaps even 10 to 1. There's lots of reasons for that, and I really don't want to go into that deeply, because I really would rather address what I think is a more significant look at what Mr. Chilton had to say. And that is what he said that makes perfect common sense within the paradigm that he's working in. And the paradigm that he's working in is that fiat money, paper money, is something that holds value, and you'll be able to sell its silver. In other words, all these people, no matter how high it gets, will be wanting to sell you silver. That's true until the paradigm breaks down. And I believe we're on the cusp of the whole system breaking down. And this is one of my foremost tenets of why you should have a 10 or 20% interest in physical precious metal. Because there has been proven time and time again, in fact, the only almost certainty that you can say is that all fiat money eventually fails. And I think we're, again, on the cusp of that. So it's a different paradigm. My paradigm is different than Mr. Chilton's. My paradigm is there'll be silver people, that sales people or silver shops or bullion dealers or coin dealers that will stop selling it because they realize that that has more value than selling for paper, because the paper markets are in such disarray that no one is trusting them at all. And we're already seeing that on a macro level. I mean, you're seeing that China and Russia have signed agreements where they are going to trade with each other's currency directly without going through the U.S. dollar. So I think it was today or yesterday where Japan is going to be buying some Chinese debt. I mean, India is doing the same thing. So a lot of these major nation states are finding ways to circumvent and get out of the dollar exposure that's so pervasive on a global basis. And most Americans are oblivious to this fact. The only currencies that have ever held up in these types of circumstances have been gold and silver. So my paradigm is different. I'm looking at it as a preservation of capital, or perhaps capital appreciation, where that ounce of silver buys you a lot more 2 years from now than it will buy you today. I'm not looking at it in the paradigm that paper money is going to last forever and everyone wants to sell it to get that high paper price. You can take those paper dollars and do whatever you want with. Consider the fact that even the Federal Reserve admits that the dollar, since the establishment of the Fed, is down almost 97%. I mean, their job, their mandate is to have stable monetary policy. If that's stable, I'd like to see what unstable is.
Dave, do you think in the end, because of there's been a lot of manipulation in our commodity markets, whether you're looking at gold, oil, and there have been a lot of people that have documented this. You've addressed it, Ted Butler. Eric, you've addressed this, as well as numerous writings at Sprott. Do you think that eventually, when you find a market where you can't trust the integrity of that market, where contract law doesn't hold any validity in the court system, just take a look at what happened to owners of Greek debt, that markets will find a place where they can do business? In other words, the U.S. could lose its prominence in terms of commodity trading. In other words, other markets spring up, and that's where people do trading because they have a lot more faith in the integrity of another market.
Absolutely, Jim. I believe that's the case. In fact, you had this market that was going to take place in the Asian sector that's basically didn't take hold, but yet there's another one coming along, and I don't have all the details, so I don't want to misspeak, but generally that's it. Markets tend to strive to be free, and even though there can be all kinds of regulations surrounding them, free markets actually rule the day over the longer term. What I mean by that is, look at the example of the black market. I mean, the black market is usually the free market. I mean, in looking at the Soviet Union as an example, you had the official prices for certain things and all these mandates. Yet, if you knew the right people in the right places, you could probably get almost anything you wanted or needed if you were willing to pay the price. And, you know, I've studied economics basically my entire life, and I don't have all the answers. But what I have found is that the number one most important thing that makes the market work the best is freedom. And that's what free markets are about. It's a free exchange not only of ideas, which is philosophical, but the free market means that I have the ability to sell something to you for whatever I want. Let's say it's silver coins. And when we make that exchange, we both feel we have benefited. I have got something from you, Jim, a book I've really wanted, and you've got two, and you're going to sell me, and I'm going to give you some silver for that. You would rather have the silver than the book, and I'd rather have the book than the silver. That's the free market. It's that simple. But when you get someone to regulate that, no, if you sell a book, there's this other tax on it, or there's this, you know, whatever, and it just goes on. And we've just gotten away from the basic, simple, common sense ideas that really made things flourish. And we've just convoluted it so much. As you said, Jim, when the contract law system breaks down, the one thing, and this is going on a bit long, but I just want to make one more point. All the studies that go on about what made America great, there are several academics that have different theories, but I've come to the conclusion that there's really one, and that's the rule of law. When someone says they're going to do something and they do it, that's basically contract law. That's the essence of it. That's where you have a stable, honest, fair, free-flowing society where everyone can maximize their own abilities and skill levels to make the society at large better, and better still. And that's division of labor. And that's what makes things so good and made it so fantastic in the United States of America for so long. But unfortunately, at this point in time, that's really something that's been far, far, far in the past. And I think there are people that are waking up to the fact that something that simple, that makes that much common sense, is something that we need to restore if we're ever going to get ourselves out of the mess that we've currently put ourselves in.
Well, I guess maybe, Eric, if there's some good news here, I remember you remember this as well, in the last decade, at the beginning of the last decade, silver would get down to 4